Italiana in Washington, Amerigo for Law, it is usually a program that is held in person, a renowned program of the Amerigo Association. This year, it's not possible to do it, but I guarantee you, I promise you that the lineup of renowned guests that we have will make it up for the in-person meeting. I am a journalist, a television correspondent. I usually come to the Italian embassy to cover events. I am on the other side of the fence, and I cannot tell you how happy I am to introduce you our beloved ambassador Armando Barricchio and to welcome him in this webinar.
Thank you very much. Thank you very much, Francesca. Thank you to everybody. I miss you here in Washington, but I hope that this meeting will be able to ensure this year too very, very lively opportunity to exchange views on a great topic. I extend a warm virtual welcome to our friends from Amerigo Association, in particular the President Andrea Gumina and the past President Vito Cozzoli, and all the team of the association, including the co-founder Rosa Barresi. I really wish you a virtual welcome here to Washington. And also to all our panelists and those who will make our event so interesting. Just a few months ago, central bank digital currencies were mainly a topic for discussion on experts. Today, however, they've been taken a center stage in the public debate. Just last year, the embassy co-sponsored the DC FinTech Week, one of the most important policy fora in the field of financial innovation. The hottest issue was the Libra project launched by Facebook back in June 2019. History will tell us about Libra's role. What is clear today is that the pace of innovation in the payment system has accelerated worldwide, both in the private and in the public sector. Since last year, several central banks have upgraded their payment infrastructures and are now closer to launching their own digital currencies. The European Central Bank recently published a report on digital euro, and the Federal Reserve is actively experimenting on digital dollar. Last month, China started its public trials of experimental digital currency, and the smaller countries too are extremely active. It seems that the question is no longer if central banks will issue digital currencies, but rather when. And the recent survey by the Bank of International Settlements shows that the majority of central banks evaluating the launch of their own digital currencies have three main concerns. First, what operational role will central banks play? Second, which infrastructure should be used, a conventional centralized database, or rather a distributed ledger technology? And third, how can consumers access the digital currency? Answering these very important questions properly is key to setting the standards and the rules that will eventually govern the future global payment system. And this leads us to our final question, and indeed the matter at hand. What are the international implications of central bank digital currencies, in particular for the dollar and euro? Reserve currency status does not depend only on the economic strength and institutional stability of the issuing country. We rather all know that the cornerstone of monetary stability is a very important word: trust. Good money is always trusted money. And this is even truer for digital currencies because they are dematerialized. They rely on new technologies and can convey a lot more information about users than traditional banknotes. Creating and preserving the conditions for building trust is difficult, but unavoidable. The rulebook is being written as we speak, and it is key that the United States and Europe work together for a shared approach on regulation, technical features, and interoperability. I'm confident that this virtual meeting, which brings together experts with very different backgrounds, as well as 4 outstanding panelists, will be the perfect medium to further that debate. We are at the dawn on a new phase of transatlantic cooperation. We are all looking forward to resuming important talks between the 2 sides of the ocean. This is a moment when global challenges rather increase the need for a strengthened cooperation between Europe and the United States. This topic, I think, will be particularly important, and I'm very pleased that the brightest minds, those who follow with great professional skills this issue, are convened here today. Will have the opportunity to exchange their views, both from the US and Europe. And I'm particularly proud that such a distinguished organization like Amerigo for Law has once again shown interest and ability to focus on what really matters today. So having said that, I wish you to all the participants and the panelists a very welcome and interesting discussion. And I extend to all of you a warm arrivederci.
Ambassador Varricchio, thank you so much for your remark, for your presentation. And of course, we completely agree with you about the importance of the panelists of this webinar and the importance of their different backgrounds. I would like now to introduce to Andrea Mina, who is the president of the Amerigo Association. The Amerigo Association, it's an alumni association for the international cultural program under the auspices of the Department of State. Andrea came into this position at a very tumultuous time in the middle of the pandemic. When he welcomed me and other members in the Direttivo, I heard, he did not say this word, but I heard a call that it was similar to your mission is, should you wish to take it, that of course it's a mission impossible line, meaning that Amerigo has many, many ambitious objectives that we intend to conquer. And I think that to be able to hold this meeting, that of course it's a brains of Rosa Giovanna Barresi and Vito Cozzoli under the guidance of Andrea, it's really important. Andrea, please join us, and the floor is to you.
Thank you so much, Francesca. I will be very brief. Honorable Ambassador Varricchio, dear panelist, distinguished guest, first of all, a very good morning to you all and a good afternoon to those who follow us from Italy. It is an honor, as Francesca said, and a privilege to briefly introduce the Amerigo Association and its history. Amerigo Association, established in 2007, gathers the Italian alumni of international cultural exchange programs of the United States Department of State. Among Amerigo associates, we find Fulbright Fellows, Eisenhower Fellows, and International Visitor Leadership Program members. Amerigo Association cooperates with the United States Diplomatic Mission to Italy in organizing events like the Amerigo Journalist Prize and the Literature Award, inspired by Roosevelt's political doctrine of 4 liberties. In addition, as we represent the Italian alumni community, we devote a significant amount of our time to civic engagement, giving life to country-level programs based on an exchange of views, knowledge, expertise, relationships at a transatlantic level. Among them, I can refer to the Smart City Tour, for example, to the Rome City of Talent Benefit Corporation that we recently incorporated, the Transatlantic Investors Club, and the very recent agreement with Junior Achievement that will bring our entrepreneurial background to primary and secondary schools in Italy. Amerigo Association is also running cooperation programs with other US organizations. Amerigo for Law, for instance, is a high specialization program in US law for professionals, originated from a partnership with Fordham University School of Law. Amerigo Association and the team of Amerigo for Law are grateful to the Italian Embassy in Washington, D.C. for its support during these years. Sometimes reaching a target is not the only measure of success. In the democratic process, how to reach a target is as important as reaching it first. When Facebook formally announced its Libra project, as Ambassador Varricchio reminded us on June 18, 2019, very few people on Capitol Hill had an idea of what a digital currency was. Since its establishment, the Digital Dollar Project has been running a public awareness campaign about the various forms of digital currency and about the need for a US digital currency having legal tender status. In a similar way, the European Central Bank has launched a public consultation about the benefits and the challenges of a digital euro, open to all European citizens. And as a symbol of the intention of the European Central Bank to develop a digital currency, digital euro is now a registered trademark. The International Monetary Fund, as well, has always been on the edge of central bank digital currency research activities and on the front on financial inclusion. Talking about that, every time there is a need to subsidize a human activity, we can ensure its personal and lawful use by channeling that money through a central bank digital currency. In conclusion, we wish a good work to those who are committed to promote the development of these new technologies. I hope you can enjoy our initiative and that very soon we will start to gather in presence again. Again, my deepest thanks to Ambassador Varricchio and his team for the continuous support, and to the coordinator of this program, Rosa Giovanna Barresi, for her restless activity. Now, before Francesca Forcella gives the floor to Vito Cozzoli, I want to thank him again for the passion and vision that has been of paramount importance for Amerigo for Law program to see light. Thank you, Vito. Thank you so much to everyone, and have a good time.
Grazie, Andrea. Thank you. I would like to welcome now Vito Cozzoli, past president. He's been president of Amerigo for 7 years. Now it's a past president, and it's now the CEO of Sport and Salute SPA. So I was lucky enough to be the recipient of the Amerigo Journalist Award, and that's how I met Mr. Cozzoli. I didn't know him at the time, but all my colleagues and friends of Amerigo in Firenze told me what an amazing leadership and how Amerigo was able to flourish under his guidance. So Vito, I welcome you to this event, to this webinar. Welcome.
Thank you, Francesca. Honorable Ambassador Varricchio, my friend Armando, distinguished guest, President Gumina, thank you for your kind words. Good morning for the US and good afternoon for Italy. It's an honor and a privilege to introduce a new edition of Amerigo for Law, a cooperative learning program for lawyers and managers. Even in present times, Amerigo for Law remains a big experience of relations for everyone and a resource for Italian professionals sharing the common ideals of economic growth, human progress, and the rule of law. Now, in its fourth edition, Amerigo for Law will, while paying to COVID-19 the usual toll of becoming an online meeting, will be up to its task of promoting an effective dialogue between Italy and the United States of America. Amerigo Association and the team of Amerigo for Law are grateful to Mr. Ambassador and the Italian Embassy in Washington, D.C. for their determinant contribution in supporting this initiative. I would like to speak about two of the main foundations of our society: currency and the sport, according to my new point of view. The growing discussion about the digital economy and about central bank digital currencies allows us to remember the symbolic and historical significance of money. During the Middle Ages, Italian municipalities started minting coins as a symbol of their independence. During the last 20 years, our currency has been an expression of both the Italian state and of the entire European Union. The US dollar, which enjoys a longer tradition, shares now with the euro the responsibility of representing democracy and progress in the global economy. On the other hand, in the history, sport has been an excellent tool for social and economic cohesion. While practicing a sport or while following the Olympic Games as spectators, we feel as a part of a whole, be it our nation or the entire world. Also, sport is going to be a leading investment area for our economic recovery. It's a human-intensive activity that can be created locally and rapidly consumed. Sport is now a genetic element in people's lives. We also imagine technology to serve people. From January 2021, the first Italian sport tech startup accelerator, led by Sport and Salute, the state company that I lead, and Cassa Depositi e Prestiti Venture Capital will be active. The goal is to strengthen research in sport and health and produce a new sports ecosystem capable of making the economy and the youth world grow. Today's meeting is going to be a real laboratory of technique and friendship. Our meeting of the minds will be the opportunity to improve our skills and our relationships in order to develop bridges between our countries. My wish is this event will help fostering the transatlantic dialogue as described in the statute of our association. I would like to renew my thanks to Mr. Varricchio, to the team of the Italian Embassy in Washington, D.C., and to the Amerigo for Law team, especially to Rosa Giovanna Barresi, those cooperated to organize this event. A special greeting to my travel friends of Amerigo for Law. Ciao e a presto.
Thank you so much, Mr. Cozzoli. I would like now to introduce our panelists. The central bank digital currency is a current and crucial topic. Some economists think that the central bank digital currency are the future of money. And the economist Nuria Rubini predicted that the CBT-powered revolution is coming in as soon as 3 years, and US Fed economists are exploring the intrinsic value drivers of central bank digital currency. So our panelists today are Mr. Christopher Giancarlo, co-founder of Digital Dollar Foundation, with Daniel Gorfin, founder and CEO of Gattaca Horizons, Filippo Zatti, Associate Professor of Economic Law at the University of Florence, Tommaso Mancini Griffoli, Division Chief at the International Monetary Fund at the IMF, and Rosa Giovanni Barresi, lawyer, co-founder of Amerigo for Law. Before giving the floor to Mr. Giancarlo, I would like to remind our attendees that they can post question on this Zoom chat or on Facebook. The question will be reviewed, and we will post some of these questions later on at about 12 Eastern time and 6 p.m. in Italy. Mr. Giancarlo, the floor is yours.
Well, buongiorno, buonasera, good day, good evening to everybody. Honorable Ambassador, distinguished guests, fellow panelists, and people listening in, both in Italy and the United States. It's really a pleasure to be with you today. And my thanks to the Amerigo Institute and to the staff of the Italian Embassy for putting together today's program. I'm only sorry that we couldn't do this today at Italy's beautiful embassy in Washington, which I've had the pleasure to visit many times, and it's such a beautiful building. I'm ashamed that we're not there, but we are here, and it's a delight to be with you. I'm Chris Giancarlo. I'm senior counsel at the international law firm of Wilkie, Farr, and Gallagher, and I'm the former chairman of the U.S. Commodity Futures Trading Commission. And I'm also a principal in the Digital Dollar Project, and I'm joined today by my co-founder, Daniel Gorfine, who you will hear from in a moment. Let me begin with 3 key observations about US and indeed Western financial markets from my 5 years in Washington. First, much of the physical infrastructure that we see here in the United States of bridges, tunnels, airports, and mass transit systems that were built in the last century have been allowed to age and deteriorate, in some cases become obsolete in the current century. And sadly, the same is true about too much of financial infrastructure in the United States, and indeed much of the developed Western economies. That is, systems for payment and settlement, shareholder and proxy voting, investor access and disclosure, and indeed the financial system regulatory oversight itself that were once state-of-the-art and global models in the 20th century have fallen behind the times, and in some cases, it's embarrassing to the degree to which they are falling behind the times in the 21st century. This aged financial system infrastructure puts the United States certainly at a competitive economic disadvantage to economies like China that are building new financial infrastructure from scratch using new 21st century digital technology. For example, it typically takes days in the United States to settle and clear retail bank transfers. In many other countries, it takes minutes, if not seconds. And it also takes days to clear and settle securities transactions and weeks to obtain land title insurance. And nothing reveals the limits of our existing financial system more starkly than the US government's initial response to the COVID-19 pandemic, in which tens of millions of Americans had to wait a month or more to receive relief payments by paper check, while over 1 million payments were made to people who were dead. A second observation is that these aged financial and regulatory systems are struggling to adapt to the coming wave of digitization, the digitization of things of value. This transformation is what some people call the Internet of Value. Now, the first Internet era we all know about. It was considered the Internet of Information. Wikipedia is an example of that first wave, a massive, decentralized, online reference authority composed collaboratively by volunteers who share information and knowledge and write peer-reviewed entries without pay. And a later example is Facebook, which, though ostensibly an online social community, is mainly valued for its prowess in analyzing and merchandising large data sets. That first internet wave is being superseded by the next wave, the Internet of Things, in which everything from assembly lines to refrigerators will be connected to the internet. Well, that wave will soon be followed by the next wave, the Internet of Value. And in this internet wave, things of value like energy, agricultural and mineral commodities, contracts and stock certificates and land records and property titles, and cultural assets like music and art, and personal assets like votes in an election and even personal identities will be able to be stored, managed, transacted, and moved around in a secure private way from person to person without third-party intermediaries. This next wave of the internet also has the potential to shift the medium of trust from large centrally managed institutions with legal authority to person-to-person digital handshakes powered by cryptography, tokenization, shared ledgers, and a network of personal computers and smartphones. And I believe that nowhere will the Internet of Value have a more dramatic impact than in the area of money. Sir John Cunliffe, the Deputy Governor of the Bank of England, said to me recently that looking at history, it seemed that every several generations, society re-asks the question, what is money after all? He thinks this new wave of the Internet is causing society to ask that question once again. Well, the birth of Bitcoin in the wake of the 2008 financial crisis was the first iteration of the Internet of Value in the form of a digital asset. Since then, the private sector has launched thousands of budding non-sovereign cryptocurrencies of lesser or greater promise. And they include instruments like Bitcoin that are decentralized and not tied to any national currency. Instruments like stablecoins that are also decentralized, but have some degree of price stability by connection to sovereign currencies. And private stablecoins built on private blockchains for use by selected users. My third observation from 5 years in Washington is that if we act now, I believe we can harness this wave of innovation for greater financial inclusion, capital and operational efficiency, and economic growth for generations to come. However, if we do not act, this coming wave of the Internet will lay bare the shortcomings of the West's aged and analog financial systems. A year ago, Daniel Gorfine and I wrote an op-ed in the Wall Street Journal calling for exploration of a US CBDC. In January of this year, we launched the Digital Dollar Project at the World Economic Forum in Davos, Switzerland. The Digital Dollar Project is a think tank devoted to the public discussion of the merits of a tokenized form of the United States central bank digital currency. It's what we termed a digital dollar. The project is a partnership between Accenture, the global consultancy firm, and the Digital Dollar Foundation, which I formed as a not-for-profit foundation with Daniel Gorfine and my brother Charles, a prominent Silicon Valley entrepreneur. The project is not a commercial venture. Our mission is entirely one of serving the public interest. The foundation is self-funded, and Accenture is providing its services on a pro bono basis. Our mission is to encourage research and public discussion of the advantages of a digital dollar, to convene private sector thought leaders and actors, and propose possible models to support the public sector. We look to help formulate a framework for potential practical steps that can be taken to establish a US CBDC. And we're actively engaged with the US Congress, with senior administration officials, and policy bodies both here in the US and abroad. The project has assembled an extraordinarily experienced advisory board in order to bring many perspectives and professional disciplines to bear. It includes economists and business leaders and technologists, lawyers, academics, consumer advocates, and human rights experts, and is fully nonpartisan. Now, when we refer to a US dollar CBDC, we use the phrase digital dollar. We chose that title because it's catchy. However, it's not entirely accurate. The dollar is already digital in the form of electronic bank accounts. But what we're talking about is tokenized fiat money, not accounts-based money. I often explain the difference by pointing out that when one uses Zelle or Venmo, you're still using accounts-based money. The transaction is a series of messages instructing movement by third parties of accounts-based money. When you swipe your phone against a reader for an Apple Pay transaction, it's another series of messages. But with a digital dollar, we're talking about swiping your mobile device and actually moving real money from you to someone else immediately, just like cash, without any messages or intermediaries. Today, you can share a photo or a video with someone around the world in a second, but it takes days, if not weeks, to send a few $100s. A digital dollar would make sending money as simple as sending a text message. At the end of May 2020, we released our initial white paper outlining a successful model for a tokenized digital dollar that has the same legal status as physical currency. And you can view our white paper at digitaldollarproject.org. Our white paper provides details on how we view the structure, operation, and benefits of a digital dollar. Last month, we released our proposals for a series of digital dollar pilot programs. In conclusion, we believe that the ultimate reason that the US should explore a US CBDC is to modernize the dollar itself, not because others are doing it, but because modernization of economic infrastructure is a good all by itself. It would offer new functionalities and more refined tools to overcome existing limitations of central bank money. It would bring a number of potential benefits to global payment, clearing, and settlement systems. And it would enhance the dollar's functionality for the new digital age to come. We should modernize the US dollar for the same reason we must modernize all economic and commercial infrastructure, to keep pace and to benefit from advanced new architectures of technology and innovation. We should modernize the dollar to have a stake in the future of money and the values that will be enshrined in it. I'll now hand off to Daniel to talk a little bit about the history and evolution of money, and then about the Digital Dollar Project's ideas for exploratory pilot programs. Daniel?
Thank you so much, Chris. So my name is Daniel Gorfine. I am the founder of Gattaca Horizons, a fintech advisory and consulting firm, and the co-founder and director of the not-for-profit Digital Dollar Project. I previously served as the Chief Innovation Officer at the U.S. Commodity Futures Trading Commission under then Chairman Chris Giancarlo. I want to join Chris in thanking all of you for hosting us today. And I must add that having two parents who attended the University of Bologna for medical school, I'm especially glad to be joining this transatlantic discussion. So before delving into the design elements or details, or what we call the champion model of the Digital Dollar Project, I'd like to step back and cover two fundamental points that help set the backdrop for why we are even having a conversation today about CBDC. So first, I want to talk briefly about the evolution of money, and I'm going to go way back in time. So it is estimated that roughly 3,000 years ago, human beings invented coins. Now, what is a coin? A coin is a physical token that people can exchange for current goods and services. This store of value also serves as a way to allow for future consumption of goods and services. Now, if you think back 3,000 years ago, these were face-to-face, peer-to-peer transactions of individuals. And if you think about it as a payment method, it was incredibly efficient, fast, settling instantaneously, and very low cost. Somebody hands you wheat, you exchange a coin, and the transaction is complete. But as the world developed new modes of communication, whether it started off as horse and carriage, telegraphs, telephones, to the advent of fax machines, and finally computers, we realized that we could not use a physical token to transact in a face-to-face manner, just by the nature of how trade was evolving and communication was evolving. Hence, we developed accounts-based systems whereby a trusted central party would maintain a ledger and can track transactions. Now, to be clear, this is a great system. It's worked very well to allow the development of economies, and it will continue to work well. In fact, our bank account systems, credit cards, debit cards, e-money systems, as Chris referenced, they all largely rely on accounts-based systems. And with account-based systems, you can gain extra security, potentially insurance. You can receive payment rewards. There's access to things like credit. So many benefits and positives that come from an accounts-based world. Now, of course, there may be some inefficiencies given the role and kind of the central role of intermediaries, including potentially higher costs and slower speeds associated with managing such a system. So what if there were a way in our modern digital world to transact again in a way that's at least comparable to a peer-to-peer transaction, and use a token almost as if you were exchanging a physical token, the coin or cash that we've become accustomed to? So this leads me to my second point, and it's the idea that today, technology can enable or unlock that digital token scenario that I just outlined. You know, of all my takeaways from my time either at the CFTC or in general studying tokenization, blockchain, and crypto, this is what I think it stands for. It stands for the idea that we know that computers are connected via the internet. As Chris mentioned, we can send information, most notably an email, halfway around the world at very low cost, with very little friction, few intermediaries, in a largely automated way. Now, thanks to tokenization and blockchain-based or inspired systems, we can do the same thing with financial instruments and assets. They effectively become bearer instruments, and whoever holds it owns it. So tokenization allows us to send unique information about value and ownership, similar to an email, halfway around the world at low cost with little friction, fewer intermediaries, and again, in a largely automated way. So with this backdrop, let's shift more specifically to central bank digital currency. And Chris started to outline some of the champion elements of what we believe a US CBDC should be based on, and some of the related design choices and trade-offs. So I'm going to walk through some of those key tenets or elements and explain the trade-offs and things that, as a matter of policy, we need to be thinking through. So the first one, which I won't spend too much time on since we've already discussed it, is the primary distinction between tokenization and accounts-based systems. Again, a token is a digital bearer instrument versus an accounts-based system where you essentially require an intermediary to be the central holder of a ledger. A tokenized dollar or a tokenized euro is a third format of currency. It can operate alongside existing fiat currency and commercial bank money, and it mirrors many of the properties of physical money, including its ability to work alongside existing accounts-based systems. These are not mutually exclusive. A second major design choice that we need to think about is how you distribute the digital currency. So I'll give two extreme examples. You can use a centralized database, perhaps managed by the central bank. That is a very efficient way to offer payments. You have a central ledger, it's very efficient. However, it may lack certain amounts of resiliency, transparency, trust, and there may be privacy concerns with such a system. What we propose in our champion model is to continue to distribute central bank money through the two-tiered banking system, meaning through regulated banks and regulated financial intermediaries that could include regulated fintech companies. Now, a next very critical consideration and design element, especially for this type of a transatlantic discussion, is around interoperability. It's really important in the early days as we think about designing CBDC that we think about how it interacts with other currencies, systems, and assets. So for example, can you exchange one CBDC for another CBDC readily? Can you easily move it or convert it into an accounts-based money system, which is something that we think is very important. In fact, I'll speak in a few minutes about how CBDC may be able to help onboard many or underbanked individuals into the financial system, but they should then be able to readily convert from a CBDC into commercial bank money and open a traditional bank account. Other design choices that matter tremendously are around privacy. So, there's two ways of thinking about this. We could view digital money as essentially cash. Do we want to give it the same anonymity features, below certain dollar thresholds? So for example, for anti-money laundering purposes, we have dollar amounts or thresholds that we set where special reporting is required. Perhaps if you're dealing with smaller sums of money, you're more likely to view it as cash and be willing to accept greater amounts of privacy. These are the types of things we need to think about early. Also, to what extent can technology help us serve valid regulatory interests as well as privacy interests? We can talk more later on about things like zero knowledge proofs, being able to demonstrate the truth of certain statements without yielding or unveiling underlying information. Can we use these technologies to balance the various and very important privacy interests with regulatory interests? It was mentioned at the outset that another important design choice is around the rails that you're actually going to transact. Just because you tokenize a dollar or the euro doesn't answer the question how you're transacting it. I mentioned before, is this going to be a centralized database? Is it going to be a purely open public blockchain? Or will it be DLT inspired or kind of blockchain inspired where you have set or designated validators of the system? Another important point to really underscore is that the development of CBDC is not antithetical to further private sector innovation. One of the ways that we like to think about this is much like the upgrading of roads to big public highways certainly impacted the transport industry. But we would argue that big public infrastructure like highways developed new and better forms of private transport. If you think about CBDC as core public infrastructure, there will be substantial private sector innovation that will develop on top of that public infrastructure. A final point related to innovation is the inherently programmable nature of tokens. So the idea that you can embed or wrap, whether it's regulatory compliance or business logic around a token. A lot of this will drive further automation, whether it's in real world economic activity or in financial services. So as I wrap up my initial remarks, one of the things to truly underscore is that the Digital Dollar Project believes that real world testing and piloting of CBDC is critical. The time for talking about it has probably passed. It's time to start executing. Let's measure outcomes. Let's measure the purported benefits. Let's identify and understand what some of the challenges can be. Let's also consider the challenger models. Are there alternative systems that can offer benefits without some of the costs of a CBDC? But in particular, we would organize pilots and trials into three primary categories. One is the retail payment space. Now, you could see potential application for small business merchants who would now have a new means of accepting payment by way of a digital currency. The other area, as I mentioned before, is around access and inclusion for and underbanked individuals. The hypothesis to test here is that the offering of a digital wallet service may be lower cost from a technology, regulatory, and operational perspective than a traditional bank account. If that plays out, the nearly ubiquitous nature of smartphones today means that we can have digital wallet service providers preloaded on phones, which would allow for the onboarding of many individuals who currently lack bank accounts. There's also a wholesale and capital markets aspect to digital dollars or digital currencies that can be tested and should be tested. And finally, the third bucket is around international payments and cross-border payments. I'll pose here an idea for a pilot would be to have a major European city, perhaps partnering with a major American city, where we try to drive trade through interoperable CBDC and measure the benefits and the reduction in transaction costs from doing that type of a pilot. So these are the things that Chris and I and the Digital Dollar Project are trying to promote. Let's think big, but let's start to do real world testing so we can actually measure benefits. We've long argued it's not necessary to necessarily be first when it comes to CBDC, but you also can't be far behind. And we need to make sure that as we design systems, we're imbuing them with many of the norms and values that we all share around trust, privacy, security, and the design features that will be the design features for the future of money. Now is the appropriate time for us to be testing it. You're not going to be able to flip a switch 5 years from now and decide that it's time to launch a digital currency if we haven't done the important hard work now. So I will stop there and thank you all for the time.
Thank you, Mr. Giancarlo and Mr. Gorfin. I know that we have connection in Italy. You know our country very well with the University of Bologna and Padova. It seems that you're reading even our Italian journalist mind. You're already answering some of the questions we're receiving, and for this, I thank you. I would like now to welcome Mr. Filippo Zatti, Associate Professor of Economic Law, Department of Economics and Management at the University of Florence. He's the Director of a University Research Unit for Blockchains and Artificial Intelligence Studies under Economics and Legal Issues, and is in the Academic Advisory Board member of NTBA, the International Association for Trusted Blockchain Application. Filippo Zatti, the floor is yours.
Thank you so much, Mrs. Forcella. Just to be more precise, the Academic Advisory member of INATBA is a European Commission international organization. But thank you, it's not your mistake, obviously. Thank you very much to the embassy, Italian Embassy of Washington, and especially a special thank to Amerigo for Law Association for this great invitation. And particularly to Miss Rosa Giovanna Barresi, allowed me to be next to so distinguished panelists in discussing about central bank digital currencies and the future of money. So, digital dollar and digital euro. Why now? Not exactly now, it is at least 3 years or even more if we consider all the work projects concerning the issue of digital currencies by public powers, namely central banks, that these projects are becoming concrete. Perhaps the question could be better asked this way. Is the COVID-19 an excellent reason to foster the adoption of such digital currencies? It is not only even if there is a perception that the use of cash is diminishing for electronic payments. Nevertheless, the phenomenon is not homogeneous through the European Union member states. Also, the cost of minting and the maintenance of cash is essential, but hardly the real reason why central banks move towards the adoption of digital currencies. We could state as well as for the social costs due to financial intermediation and the aim of financial inclusion, as also Mr. Professor Gorfain said. If I focus on the European Central Bank, we observe a change of step in moving towards a central bank digital currency. If a former ECB president, Mr. Draghi, in September 2018, announced that ECB has no plans to issue a digital euro, after a couple of years, the idea completely shifts. As perhaps you know, on October the 2nd, this year, the European Central Bank joined most of the world central banks which are facing the opportunity to issue digital currencies. The ECB published a report and opened a public consultation, as however still already been said, which will be over in 2 months from today, exactly on January 12 next year. At page 2 of the report, we read that the ECB's Governing Council decided, and quoted, to advance work on the possible issuance of a digital euro. However, European Central Bank has not decided yet to launch the digital euro. As we understand, reading a little further the report, where we realize that the growing and new interest for CBDCs in the world asks also European Central Bank, to be ready to introduce a digital euro shall the need arise. At about the middle 2021, the euro system will decide whether to enter the investigation phase. According to the report, what will be the design of digital euro? This is a good question in order to introduce the topic. We cannot find a choice by now. There are many reasons for that. We can interpret one of these reasons focusing on a word that we find in the report 11 times, liability. Not so much, one could say. So why just the term liability, according my opinion? Nearly every time it is used, it did to specify that the digital euro will be a central bank liability offered in digital form for use by citizens and businesses for their retail payments. More specifically, in 4 distinct points of the report, central bank liability becomes liability of the euro system. Why do we focus on these? To be a liability of the issuer, it is a common nature of all the fiat currencies. So what's news? And the answer is in Annex 2 of the report, where we find that the digital euro is said not to be a crypto asset because these currencies are not, quoted, a liability of any entity. Thus, there is no reliable framework to sustain their value and to protect their direct holders. The lack of liability is in a paper drawn up by European Central Bank Crypto Assets Task Force in 2019. Here we find an indeed distinct definition from that we can find in the proposal for regulation on markets in crypto assets recently issued by the European Commission. Here, crypto asset stand for, quoted, a digital representation of value or rights, which may be transferred and stored electronically using distributed ledger or similar technology. The proposal of regulation MiCA introduces a broad definition of crypto asset, moving from the transnational feature of DLT and the need to grab potential difference notion of it. We can say that MiCA regulation proposal is out of the scope of the European Central Bank. Yes, it is, but we cannot stay out of this definition only because it is out of scope. It is questionable, not in our view, if a so disruptive technology could allow namely to foster the efficiency of the payment system together with the financial inclusion needs and of the monetary policy transmission channels, contributing to the allocational efficiency as well. At this point, we could face a potential oxymoron, since legal instruments risk being effective with a technology which behaves as a substitute of law. Is the CBDC a new form of breaking money, or vice versa, is the attempt by the central banks to defend their leadership in the monetary policy? Are CBDCs merely a reaction to stable coins, such as Libra, and cryptocurrencies, such as Bitcoin? Or are they a need? By the way, it is not unexpected that most of the report concerns legal implications and issues, namely in Chapter 4. Moreover, the European Central Bank addresses the topic against the background of its mandate. Throughout the report, we see particular attention in confirming that the digital euro issuance would not change the current legal framework as given by the European Union treaties. It is for the unique features of this currency that we must remember, and the institutional role played by the European Central Bank. European Central Bank, but more precisely European System of Central Bank, was recently established if confronted with the most significant international central banks, such as the Fed. It is the only one to be ruled by a treaty and to have such a great independency from the political powers, both at European Union and state members level, where price stability remains the very first goal, being only subordinated to it to support economic policy. The monetary policy objects could be hardly reachable with a digital euro designed as a crypto asset. Perhaps this is why so many times the report remains the full control of the euro system on the amount of central bank money issued in the form of digital euro, as well as the legal matters. Also, the technical aspects come into play with particular attention in the report. These issues come diffusely. Where they namely are figured is to examine the requirements according to the different potential scenarios, respectively regarded the core central bank functions and to the broader objectives of the European Union. And also in chapter 6 of the report, where the report takes in consideration the different technical and organizational approaches. Regarding these last topics, it seems interesting to highlight 2 points which can be shared with all the other central banks running a CBDC's project. The first one is regarding the international role of the euro. The digital euro should be potentially accessible outside the euro area in a way that is consistent with the objectives of the euro system and convenient to non-euro area residents. It could be a common goal of every CBDC project and an understandable reason for considering their issue. The second aspect concerns the importance of where these currencies are custodied, especially if we will have a DLT solution base, we will need to find instruments which can avoid all the inherent problems of cryptocurrencies. Nevertheless, with a potential distinction in terms of devices which permit the use of CBDCs in different countries and operative conditions. Think of the possible problems to the access of the cryptos if the wallet is not universally accessible in case CBDC's standards are different. In the report, there is no sign of this worry, neither where the hardware solutions are discussed. But we notice that the CBDC's custody will have to find more secure forms of storing than ensured by mobile phones. However, the digital euro project is far to come. Expectations today are within 2025. Thank you for the attention.
Thank you very much. I would like now to introduce Rosa Giovanni Barresi, Amerigo for Law. It's her brainchild. Rosa Giovanni is a deus ex machina of Amerigo for Law that she co-founded with Mr. Cozzoli. So Rosa Giovanni, after a career in banking, devoted her focus on the CBDC. Rosa Giovanna, the floor is yours. I'm not sure what happened with the connection. Rosa Giovanna, you can go ahead.
Good evening, everyone. I think that Professor Tommaso Griffoli
I'm sorry. Yes, I'm sorry if I can. Yes, I'm so sorry. We have a little bit of mishap. We now are going. Rosa Giovanni, my mistake. We're now going to Tommaso Mancini Griffoli. Sorry for the mix-up. Tommaso Mancini Griffoli is a division chief at the International Monetary Fund. Tommaso Mancini Griffoli, the floor is yours.
Thank you very much. Delighted to be here. Thank you very much to Ambassador Barricchio, to the Amerigo Association, the Embassy of Italy, and other organizers for this wonderful event. And it's a pleasure to be on stage here, or at least on camera, with the other distinguished panelists, and who raised a lot of interesting issues. I have a lot of thoughts actually on what they said, and I hope we'll be able to come back to those in the discussion. I was asked to speak on the international implications of digital forms of money. So I'll focus on two forms: CBDC, central bank digital currencies, and so-called global stablecoins. Think of a stablecoin issued by a big tech firm, such as Facebook, for instance, that would be available across borders. And the question is, what is the availability of these digital currencies across borders? What is the effect that this is going to have on monetary policies, on financial stability, on capital flows, to some extent on the international monetary system? So I'll go through that in turn. And of course, we use foreign currencies for cross-border transactions, but we also use foreign currencies for domestic transactions to some extent, and to store value domestically. That's generally known as currency substitution or dollarization in the jargon. We tend to think that adoption of foreign currency for such purposes depends on the issuer of the foreign currency, the economic weight, the geopolitical weight of the issuer. We also tend to think that it depends on the recipient country, the monetary stability of that country, and regulation and other official policies of that country. And of course, the adoption of currency depends on network effects. The fact that I prefer to use a currency that more people use so that I can transact with more people. And of course, there are new features of digital currencies that might make those attractive across borders, that might make their adoption faster, more widespread across borders. And those features are the low transaction cost, the ease of access, the integration with other digital services, and potentially even the outright bundling of these currencies with digital services. So how would the world look like? Can we imagine a world where we have widespread adoption of these digital forms of money across borders? So since we don't have a crystal ball, what we've done in a recent paper at the fund is to imagine 4 scenarios. One scenario is that CBDCs would be used across borders in a niche context for remittances. So we know that remittances are expensive. We know that there are a lot of people who cannot access international payment systems to send money. And so CBDCs and perhaps global stablecoins could be used just for remittances, scenario 1. Scenario 2 is the widespread use of these digital currencies in countries with weak fundamentals, with high inflation, volatile exchange rates. And so we basically have the scenario of heightened currency substitution. The third scenario is, which we can't rule out, is the widespread use of a global stablecoin in its own unit of account. So imagine a global stablecoin is issued. It's fully backed by, say, dollars or euros. It catches on because of large network effects and a large existing installed base. And suddenly the issuer says, well, we're now going to de-link from this currency. We're not going to back it anymore since you're all using it. We're going to introduce our own unit of account. That is a scenario that we should envision and think about, and that is our scenario 3. Scenario 4 is the multipolar world, where we have widespread use of digital currencies, of a few selected digital currencies across the world. So with these 4 scenarios, let me think about the impact on monetary policy first, then on financial stability, and follow with some observations on the international monetary system and capital flows. So relative to monetary policy, of course, we need to understand that the current world has a high degree of currency substitution already. There is about 18% of countries worldwide where the share of foreign currency deposits are larger than 50%. We also know that currency substitution can occur very rapidly. There are inflection points and exponential adoption after certain thresholds. And we also know that currency substitution can be very persistent. We work a lot with countries around the world on these issues. So of course, in the niche scenario, we don't really need to worry about currency substitution. Currency substitution, it becomes a worry in the second scenario, where there is widespread use of these foreign digital currencies in selected countries with high inflation and volatile exchange rates. Those countries will probably witness a loss or a lower degree of monetary policy control. Why? Because simply their domestic currency is no longer being used, or is being used a lot less. Of course, that depends a little bit on the correlations between the business cycle of those recipient countries and the business cycle of the issuing countries. But if the correlation is low, of course, the loss of monetary policy control is problematic. The issue of monetary policy takes on a whole other meaning when, in the third scenario, when you have a global stablecoin being used abroad, and that global stablecoin is in its own unit of account. Then suddenly you have countries that may be exposed to the monetary policy stance of a private entity. And it's hard to believe that that private entity's interests would be aligned with the country's interests. We no longer have a benevolent, say, a central bank taking into account price stability and the long-term interest of a population. There can also be effects on monetary policy of the issuing country. If there's an issuing country that issues CBDC and that CBDC is used widely around the world, perhaps in our fourth scenario, then there could be large swings in capital inflows into the issuing country, potentially large swings in exchange rates as well, and in the central bank's balance sheet, with ripple effects on asset prices. And that, I think, is very important to take into account. As we move to financial stability implications of digital currencies being used across borders, the first thing that comes to mind is run risk. The greater ease with which citizens, households, and firms of a country could run to a foreign currency in the case of significant banking sector disruptions in that country. So that is very important, I think, to take into account, and we'll come back to this in the later part of the discussion. Currency substitution in and of itself can also, of course, be problematic for financial stability to the extent that it leads to balance sheet mismatches on the balance sheets of the banks. It increases solvency risk because banks are exposed to the credit risk of unhedged borrowers. There's also the possibility for financial cycles, global financial cycles, to be amplified as countries start to lose control over their domestic financial conditions. Of course, the risks once again grow as in the scenario 3, when you have a global stablecoin provider that issues in its own unit of account. Here we have to take into account the risks of runs from the issuer, confidence crises, as this is a private issuer that may get into financial trouble. And so this adds a layer to the financial stability concerns. But of course, on the other hand, we should also not lose track of the fact that the use or the availability of digital currencies across borders could lower cross-border financial frictions and help deepen and integrate international capital markets. So there are risks and there are advantages. Now, of course, when we speak about international reserves, and this was alluded to earlier, generally the changes are very slow in the portfolios of international reserves that central banks and other entities would hold. Why? Because these depend on the full convertibility of currencies, the use of currencies in trade, the depth of markets, the stability of institutions, the rule of law, all things that take a long time to change. There is a legitimate question, I think, as to whether the introduction of digital currencies would accelerate transitions or movements away from the status quo in terms of international reserve holdings. But I think the fundamentals, or I think the view of the fund is that the fundamentals would prevail to a great extent, and the transition was likely to be relatively slow. Now, of course, we are in favor of competition between reserve issuers, and potentially the expanded supply of safe assets with more reserve currencies being held could have a stabilizing effect on the international monetary system. So what about, finally, the implications for capital flows? And not just capital flows, but a topic that is important to a lot of countries around the world, capital account restrictions. In fact, most of our member countries have implement some form of capital account restrictions, including advanced economies. And the question is, will the existence of digital currencies across borders make it easier or harder to implement these capital account restrictions? And frankly, the jury's still out. The question is a technological one, it's a legal one, and we don't really know how this is going to pan out. And we're investigating, actually, we're currently investing heavily in this area to study the implications of the international use of digital currencies on capital account dynamics. But what I would leave you with is a story to try to make this more concrete. So suppose the beautiful city of Florence, where I'm from, is trying to preserve its historical center by restricting traffic. And so Florence places all these cameras on the street corners around the city center, and that works pretty well. These cameras take a picture of cars' license plates, and the cars are fined if they enter the city center, so everything is good. And then you have the introduction of e-bikes. And there are two scenarios. One scenario is that with these little e-bikes, you can whiz through the circuits of cameras and not get taken a picture of, and enter the city center and avoid regulation at the end of the day. The other option is that these e-bikes have GPSs on them, and these GPSs locate the bike as you go around the city, and even if you avoid the cameras, the GPS doesn't allow you to park your bike in the city center. And therefore, there is a more targeted and more efficient way to implement regulation. And frankly, capital account restrictions can go either way with the introduction of digital currencies. We can either see greater circumvention of these measures with digital currencies, or with proper regulation and cooperation between states, perhaps a more targeted and efficient implementation of capital account restrictions thanks to digital currencies. So I think I would leave you with that story, and I know that I'll have the opportunity to come back on some of these themes in the Q&A, but I've spoken about the use of the availability of digital currencies across borders. Clearly, there are significant advantages. Cross-border payments could become faster, more efficient, more traceable, available to a greater number of people, with implications on the cost of doing business, on the integration of capital markets. So definite pluses. On the other hand, there are risks to monetary policy, and I pointed to currency substitution that would be especially relevant in scenarios of widespread adoption. I pointed to risks to financial stability, essentially through run risks and currency mismatches on banks' portfolios. And we discussed capital account restrictions where the jury is still out. We're not quite sure whether the availability of digital currencies would be a strong plus or a strong minus. Clearly, more work is warranted in this area. As for the international monetary system, it's very hard to tell exactly what will happen, but we think that the fundamental forces of reserve currencies will prevail, and that transitions are likely to be slow. Thanks very much.
Thank you so much, Tommaso Mancini Griffoli. I already introduced you Rosa Giovanni Barresi. This program, Amerigo for Law, it's her brainchild. Let me add that she's the author with Dr. Professor Filippo Zatti of a published paper about a secure universal access device for supporting digital identity and payment in a central bank digital currency. Rosa Giovanna will draw now her conclusion, and after her, the Q&A section will open up. Rosa Giovanna.
Good morning and good afternoon. My deepest thanks to His Excellency Ambassador Barricchio, the team of Italian Embassy in Washington, D.C., the president Andrea Gumina, the past president Vito Cozzoli, and all the speakers for making this event a memorable opportunity to analyze the digital dollar and digital euro. A year ago, nobody could imagine that the research about the central bank digital currency may have had such a rapid development. Some problems have already been solved. Others are still looking for a solution. Researchers and bankers know that the development of a viable digital currency will be a long process, and that is more a reason to step up our efforts in that direction. A major issue in ongoing research is about what the infrastructure should be needed to operate a central bank digital currency. As the central banks started drawing attention to the dangers of global stablecoins, they soon realized that resorting to abstract concept is not a viable strategy for protecting their role. The control of a reliable payment infrastructure is the best protection against unfair user data exploitation. International experience has already shown that lawsuits can take a long time and may bring unexpected outcomes. From user side, CBDC infrastructure design needs to find a balance among ease of use, reliability, and privacy concerns. From institutional side, many issues are adopting present legislation to support the new currency and innovating enforcement agencies in order to mitigate the risks of money laundering and terrorist financing. The specification of a digital wallet for handling CBDC payment is an integral part of the debate about the CBDC infrastructure. A universal access device has been proposed as a highly secure and reliable platform for storing all the personal data of its owner. At first glance, today's smartphones look like a practical and low-cost solution for handling CBDC payments. However, they are open to many risks. In the event of a natural disaster, the mobile network is one of the first utilities to go out of services. Exploits like SIM hijacking and Trojan attacks show that smartphone security should be improved. The main problem inside today's smartphones is about the protection of our payment data. As everyone agrees that our purchase history has a real economic value, privacy is no more an abstract concept. Allowing today's proprietary architecture to handle our payments open a door to many types of abuses. As an abstract concept, the universal access device could be implemented as a standalone device or inside a new generation smartphone, offering appropriate guarantees about the reliability and user privacy. As security experts are advising us, even the best user device will not work unless supported by a reliable payment infrastructure. Thus, the problem of protecting our digital persona revolves again on the main issue of digital sovereignty. Without any doubt, solution of all these problems and others are waiting for us in the near future. Thank you.
Thank you so much, Rosa Giovanna Barresi. We're now going to open the floor for questions. We're going to start with the one question to the Honorable Chris Giancarlo from Avvocato Gianluigi Passarelli. Disruptive technologies need to be supported by law. Will a digital dollar require a big rewrite at federal legislation and regulation? As the dollar is the most frequently used currency in international commerce, will we have an impact on commercial law as well?
In my experience, in my view, is that the law always follows behind technological innovation. That's especially true in common law, law jurisdictions such as the United States and Britain, but it's also true in civil law jurisdictions as well as in continental Europe. The law always follows technology. It's often the technology innovation provokes changes in legal structures. And I talked about that in my opening remarks, that a lot of, in the United States, our securities and our markets, trading infrastructure and legislation and regulation go back to the 1930s when our first securities laws were passed. And right now they are struggling to keep pace with the innovation that's coming about in this Internet of Value that I talked about, and certainly struggling to keep pace with stable coins and other forms of digital currency. Now, initially, the Federal Reserve has pretty wide powers, and as a central bank, the steps it would need to take on whole to modernize the dollar and to begin experimenting with the dollar will not require new legislation. In fact, there are a number of major committees in Congress that are calling on the Fed to move forward with experimentation. But it's very likely that some of that experimentation, that some of those pilot programs may identify areas where new legislation is needed. It may identify areas where the Federal Reserve's regulatory power over currency needs to be enhanced. No doubt, as we move further and further into this new wave of digital things of value, and we very much advocate for a central bank, a US dollar central bank digital currency to exist side by side with commercial non-sovereign currencies, as in the history of money has often been the case. But it may be that new regulatory forms may evolve out of that. I expect they will.
Very good, thank you so much. The second question is for Professor Daniel Gorfin from Avvocato Martino Galasso. An innovative feature of central bank digital currency is their programmability. The central bank may restrict the operativity of its digital currency to specified location or specified merchants or even specified products. Could this capability be used to fine-tune state subsidized and economic policies? In that case, would the digital currency lose its legal tender status?
Yeah, that's a great question. Getting an echo here. So as I mentioned in my opening remarks, you can certainly program various business and regulatory logic around a token by way of a smart contract. And that's that feature that, as I mentioned before, can drive automation. Now, I would suggest that central banks need to be very careful about going too far in embedding too much logic into the core token. That wouldn't be the role of a central bank. Money is money, it's the unit. What's powerful about a tokenized currency or a tokenized dollar or euro is that it's easy to program around the token the various logic that I just referenced. So what that would mean is that a central bank issues the digitized currency, but other governmental or private sector actors can wrap the programmability aspect, the logic, the smart contracts around the token for various purposes. So let me give a couple of examples. One would be humanitarian relief. So say there's a natural disaster or a war somewhere around the world, and a government wants to send money instantly to individuals who have been affected, but you want to make sure that that money is being used to purchase food and medical supplies and not ending up in the hands of a terrorist organization. You could imagine the coding, the logic being wrapped around the digital currency, which would then be dispensed into the particular jurisdiction. So in that case, it's not the central bank that's programming the money. It's just that the money itself lends itself to ready automation and programmability. You could do the same with benefits programs, or in the private sector context within capital markets, when you think about clearing and then settlement times, there may be benefit to not having instantaneous settlement in a capital markets transaction. You could actually code the most efficient logic for when you want that netting and settlement to actually occur. Perhaps it's 2 hours, perhaps it's 3 hours, but the business community can apply logic to the token. So it's a great question. I think that the caution here would be overdoing the role of a central bank in embedding too much logic, lest it cease to be a currency and start to look like the implementation or a more direct policy tool or business tool.
Thank you so much, Professor Gorfi. Now we're going to go to Professor Filippo Zatti. This is a question from Avvocato Alessio Lombardo. Personal digital wallets look like very high-tech devices. Are they already available on the market? Will digital wallets impact our daily lives in the same way smartphone did?
The first question is very simple to answer because they are not obviously available in the market. Today we have e-digital wallet, e-wallet, in order to custody cryptocurrencies. So it's something different from what we are talking about for CDBCs. Necessary. There are two different things, obviously, because in the case of cryptocurrencies, we are talking about a private form of money, which is not legal tender. In this case, there are more problems due to the fiat tender feature. The second question is much more complicated, because when you try to make an hypothesis about the future, obviously you put your view, your perspective. It's not so easy. I can say very simply, with a certain sense, a certain kind of slogan, I can say that in the future we can have a smart wallet, as we can have in the past. We thought to the phone to use to communicate. And we know today that a phone is something more than just for communicating. And in the future, the wallet is not the same as today. It will be not only to custody currencies in any kind of form, obviously digitized currencies, digital currencies. And perhaps, as Miss Rosa Giovanna Barresi said, we have smart wallet where we put many informations, many data, for example, about the digital identity of a person. So for this reason, the issue of a universal access device need is very important, because we have to create something that is more secure than a smartphone is. And for this reason, I think, as the Bank of Canada and then many others, not many, but a couple of others, central banks did, is very important that both the digital dollar project and also, I hope, the European Central Bank consider the possibility to study this instrument. So in the future, I think, to give a simple answer, a brief answer, I think we're going to have a smart wallet.
Thank you so much for your answer. And the next question is to Dr. Tommaso Mancini Griffoli from Avvocato Michelangelo Fasoli. Article 1 of the Article of Agreement, 4 sets to the IMF the goal of eliminating foreign exchange restriction. How will the IMF support the evolution of central bank digital currencies? Also, may we envisage a new Bretton Woods spirit for re-engineering the global economy?
Okay, thanks very much. Those are far-reaching questions. On CBDC, how will the IMF support CBDC? Through various channels. I think the first and foremost through policy development. So the fund puts out its own independent views in papers and tries to contribute to the international debate on CBDCs. And we've, of course, been one of the early proponents of CBDCs in 2018, when people were still wondering why we were working on this topic. We've introduced the possibility of a synthetic version of CBDC where the private sector would play an enhanced role. And so we'll continue to contribute to the discussion through our policy papers. The second avenue is through technical assistance. We are receiving an increasing number of calls from member countries who ask us to help them think about the potential implementation of CBDC. What are the implications they need to be concerned with? What are the design features they should be considering? And so we're going out in the field and helping member countries think about this. We're also, I think it's important to recognize the convening power of the fund. The fund can bring together central banks working on CBDC so they can learn from each other. And the fund can, with its very large membership, can bring together central banks working on CBDCs to discuss common features. We spoke earlier about interoperability, which has technical but also legal ramifications, and the importance of getting together to discuss those issues of interoperability, I think, is very, very important. The second part of the question was about the spirit of redesigning the international monetary system without necessarily going to that extent, although it's important to think about the implications on the international monetary system of digital currencies. There really is now an almost unique, relatively unprecedented window of opportunity to enhance cross-border payments, especially because policymakers have understood the importance of making these changes, because there's competition from the private sector entering the space of cross-border payments, because new technologies are available. And we've seen with the recent publication by the FSB of a roadmap to improve cross-border payments, we've seen the international community come together and actually propose concrete set of solutions and milestones and deliverables to improve on cross-border payments. I really do think that there's a window of opportunity here to really make a difference, and the international community has come together and is pushing hard to make this a reality. So step one, we have the roadmap. Step two, now we'll need to deliver on it. And but I'm very confident that this will bring important improvements to cross-border payments. Thanks.
Thank you so much, Tommaso. We're going a little bit over time, but the questions are really interesting. And for you who are still there, I would like to go ahead with another question for Professor Daniel Gorfin from the Avvocato Gianluigi Passarelli. Everyone agrees that central bank digital currency will work alongside traditional banknotes and will not replace them. 20 years ago, Eurozone institutions implemented specific programs to notify citizens about the advent of the euro and what elementary precaution to use. With the introduction of a central bank digital currency, need a comparable effort?
That's a great question. I would start off by saying that, because of the idea of real world piloting and testing of a CBDC, we can start getting this into the hands of actual individuals so that they can get a feel for how you would transact with a digital currency, a digital euro or a digital dollar. I suspect that the education required will be a lot less than has historically been the case because of individuals' fluency with all things mobile today. People are accustomed to using services like a Venmo, like a Zelle. What's going to be important on the education front is people understanding clearly what protections exist or do not exist when you're talking about a digital currency, and that will be very important. So, for example, if we hold the analogy to physical cash, if government insurance doesn't exist for a certain account, that's going to be critical information for individuals to understand. If these are non-interest bearing, if they're not insured, if they truly are digital bearer instruments where once lost, just like losing your physical wallet, it's lost. If that's the design choice that we make, that will be a very important educational effort. That's why I actually think that in terms of piloting and testing, starting with certain dollar thresholds or a de minimis amount that individuals can hold would be prudent. This would allow us to work through how people actually use the currency and make sure that we're educating and mitigating against some of the risks that could be posed by a digital bearer instrument.
Thank you so much for your answer, Professor Gorfin. I would like now go back to Professor Filippo Zatti. A question from Avvocato Alessio Lombardo about the many issues of central bank digital currency. They look to depend heavily on digital wallets. Could the development of digital wallet actually drive the evolution of central bank digital currency, or will it rather follow their development?
This is a good question, and it's very complicated to answer. We can say the same if it was born before a legal system or an economic system. I don't know. It depends on the perspective and the vision. Obviously, as a co-writer with Rosa Giovanna Barresi of a paper about a universal access device, my answer could be only one, in the sense that I see the need, the importance to have a custody for these central bank digital currencies. But apart the jokes, I think the problem now is different, but is different in the sense that it's very important to understand which kind of central bank digital currencies we are going on with. I think that we have to start immediately to build a project where custodying these central bank digital currencies, because the problem is that data, as we know, is very related, any kind of data, also in the pseudo-anonymous or anonymous form of a central bank digital currency, is going together with the privacy problems, the data protection about personal rights and others. And also we have another aspect that Professor Gorfin said before about the programmability. Today, euro is not going to be, at least reading the report, is not a programmable digital currency, but who knows in the future. So it's very important to start immediately in order to create a good ecosystem for central bank digital currencies, thinking also to the wallets, so to a universal access device for these kind of digital currencies.
Thank you so much for your answer, Professor Zatti. I would like now to go back to the Honorable Chris Giancarlo. This is a question from Avvocato Cristina Della Moretta. The US dollar is now the most frequently used currency in international commerce. With the introduction of central bank digital currency change its role, what strategy is needed to preserve the role of the US dollar in the global economy?
You know, currencies in the global economy since the beginning of time have competed against each other, both sovereign currencies and non-sovereign currencies. Currency at the end of the day is as much a social construct as it is a government construct. And just to take a particular period of history, if we look at the 16th and 17th, the 15th and 16th century exploration of the western coast of the east coast of the Western Hemisphere, multiple currencies were in competition, both sovereign currencies like Dutch guilders and florins and French francs, but also non-sovereign currencies such as scrip issued by joint stock companies. But the currency that was most desired during that period of time was the dollar. But it wasn't the US dollar, because the US hadn't been created. It was the Spanish dollar. And the reason why the Spanish dollar was the most desirable is because it had technological superiority over the other currencies. One of those superiorities was that it was minted with New World silver, not Old World silver, which was more consistently pure and required less alloy, making it lighter and easier to transport. But also it was minted in such a way that it could be divided into 8 equal pieces, known as pieces of 8, making it fractionable. and therefore more suitable for making change for smaller denomination transactions. Well, if we take that same analogy into the future, technological superiority of one currency over another, especially in a digital age, will be a reason why one currency might be preferenced over another. And we could add to the fractionalizable nature of digital currency, programmability, and portability and transferability and other aspects that a digital design, a digital architecture brings to money. So we believe at the Digital Dollar Project that the most important reason why we need to develop a digital dollar is because we need to modernize the existing dollar from an analog architecture to a digital architecture so we can have those superior characteristics for a new age. But there are also issues aside and perhaps even more important than technical issues, and those are values. There's a reason why I think the dollar has been the world's premier reserve currency for several decades. Some of those are technological, some of those have to do with the strength of the US economy and the stability of the currency, but others have to do with the values that are encoded in the dollar, values of free markets, free enterprise, privacy rights against the government's surveillance, and also rights about freedom of expression. And I think it's very important that as we architect the dollar for a new digital age, that we make sure those values that have underpinned it in the past remain in it in the future. And I would say the same is true for other important reserve currencies, such as the euro. The values of a society are encoded in its money. And the reason why we need to be very forward-leaning in modernizing our currencies ultimately comes down to making sure those values of free markets, of free enterprise, of rights of privacy vis-a-vis commercial entities as encoded in the GDPR, which Europe should be rightly proud, but also vis-a-vis governments and government surveillance. We need to make sure those are encoded. And I think if we do, then our currencies will stand very strongly against currencies perhaps of non-democracies that don't reflect some of those same values encoded into their currency.
Thank you so much, Mr. Giancarlo. The next question is for Dr. Tommaso Mancini Griffoli from Avvocato Michelangelo Fasoli. The international scene has seen the rise of the nationalist movements. People are increasingly using the currency system as a political battlefield. Will the introduction of CBDCs overcome these problems, or is it going to worsen them?
Okay, so this is a question, I guess, about fragmentation versus unification, really, and in which way will the scale tip when you have digital currencies? And I think my answer would be a strong plea, a strong advocacy for coordination, international coordination. Coordination because, well, cross-border payments are by default international, but coordination also between entities as we start to develop thinking and regulation and developing these new digital currencies. It'll be important for central banks to speak to the ministries of finance that are in charge in many countries of capital account restrictions. It'll be important to bring in privacy advocacy groups. It'll be important to consider the impact on market contestability and antitrust authorities, so coordination across agencies. Coordination also to ensure a high degree of interoperability so that we don't end up in a fragmented world. Interoperability, what does it mean? It means that if I'm in country B and somebody's trying to pay me in country A, can I hold the currency of country A? Can I pay for goods in my country with the currency in country A? Or can I exchange at least country A's currency against my own currency? This entails certain design standards, it entails certain legal standards that we have to agree on. And I think the last bit of coordination is it's very important to understand the spillover effects of the introduction of these digital currencies and their use across borders. Spillover effects on a foreign country's monetary policy. We spoke earlier about currency substitution, spillover effects onto financial stability, and the desire for many countries to retain control of monetary policy, to retain control to some extent of capital flows. How will that pan out? It's very important for the voice of countries that are trying to install those regulations to have a voice at the table where the discussions about standards for new currencies are being discussed. And so again, the importance of cooperation, of a widespread group coming together to discuss the future of digital forms of money. And the IMF is certainly ready and eager to play a role in facilitating that cooperation. Thanks very much.
Thank you so much. I need to wrap up very quickly because I went over time, but it was just too interesting to stop. So thank you so much at our team, our friends at the Italian Embassy. Thank you to our friends at Amerigo and Amerigo for Law. And of course, a special thank you for all the attendees, Mr. Giancarlo, Mr. Gorfin, Professor Zatti, and Tommaso Mancini Griffoli, of course, Rosa Giovanna Barresi and Vito Cozzoli. Thank you. Good afternoon to our friends here and good evening to our friends in Italy.